Okay, so back to this section here. We are still working on the utilities section here and product details. So here's the last question because we pretty much answered this one, how to password protect your QuickBooks. Okay, and then, oh yeah, so here's actually one thing I wanted to also let you know too is this is also asked upon when you complete your Easy Step interview. Okay, so that's also one way. But remember, if you don't password protect your QuickBooks right then and there, then the alternative way to set it up is to go to the company menu bar and set your password there. Okay. Okay, so this question says, how and why to use preferences? What is the reason why we use preferences? So
Well, let's see here. Well, one for all the icons and everything you want on your home page.
Exactly, preferences.
You have your personal preferences as well.
To set home page. It's also to set personal preferences. Yeah, whatever personal preferences. So again, as I showed you before, you can only do so much in QuickBooks, but you know, you could change colors. How else? What else? What does editing the home page or editing the menu bar or the icon bar do?
I don't know what you mean. It just means like you're making it easier for you.
There you go. Making it, yes.
Rid of things you don't need and putting like that. The icon bar can be moved underneath the menu bar. You can rearrange things, right?
Correct. So, yeah, making it easier to locate and or to enter transactions. Yes. Yeah. It just makes it a lot more quicker and more easier for you to be able to do these things. Like, for example, my icon bar, if I need a calculator, I can put it right there so then I don't have to take my phone or I don't have to get the actual computer calculator to do it for me. I can just do it right then and there.
That you feel more comfortable of using.
Exactly. Okay. All right. Now we're going to go down to list management, which is going to be 6% of your grade, which is approximately another 3 questions. So in this section here, a student should know what? Number 1 says how to manage lists. So your customer list, vendor list, items list, etc., etc. So lists managements include how to add a new item, pretty straightforward. How to delete, how to edit, and how to merge. Okay, so add is pretty straightforward.
Excuse me.
Yep.
There is a background noise.
That was Michelle. She shut her microphone off.
It's okay. I know. I understand, especially when we're doing school at home. There's some unavoidable things that can happen. So, thank you for turning off your microphone, Michelle. All right, so adding new entries or adding, for example, if you're making a list, adding is pretty straightforward, right? It's you just go down and you click new. Pretty straightforward. There's nothing to it. Now deleting. Now what is the rule of thumb here? Where for deleting anything, whether it's in a customer, vendor list, or etc. and details. What is the rules about deleting?
Not to basically. Is it more on blocking it?
Well, first off, what is the rule in general for QuickBooks and accounting purposes when it comes to deleting anything?
Never delete.
Good. Never delete.
Never delete.
Very good. Okay, and then, okay, but you can.
Inactivate or
There you go.
hide them, whatever. But
Inactivate is the correct way. Yes.
That's what I meant. Not block.
Yes, so good. Good, but I mean, you had the general idea. So there is, yes. So Inactivate accounts or items, right? You can do that by, either right clicking, or you can go manage it, right? And you can inactivate it and activate it as well. So that's only if you have details or transactions that have been used with that type of name, list, or whatever. So if that item has been used, okay. So I'm gonna put this in parentheses. Used item. Okay, if it's used, then activate and or inactivate it. Okay. Now, what if you've never ever used this at all? That item.
Then you permanently inactivate it.
You can permanently inactivate it, but
There's nothing now here. That's where I'm gonna like a person that's never done anything at all.
mhm.
They have no background. They have no years of anything. In my opinion, you could delete that.
Correct,
That's what I
correct.
have in mind.
I mean,
Yes,
I'm saying you can delete
yes.
anybody that's never done any business with you at all. There's no check
Yeah, but
history, no anything.
Absolutely, and that's exactly what QuickBooks says. That if you've never used item at all, let's say you are
Right.
building your chart of accounts and you just never used it at all, then yes, you can delete.
Right.
You can delete it if item has never been used at all. Okay, that's the only concept. But if it has been used, even if you used it 10 years ago, you need to either inactivate it or reactivate whatever it is that you choose to do with it.
Anything with any kind of transaction history at all.
Correct.
so
Then,
that
yeah.
does not have any transaction, nothing. It's zero, even past 10 years ago. But then otherwise, you are contradicting the rule there that never delete.
Well,
That's
that's
how I
just,
understand it.
this is just recommendation. So, for example, if I created an account that I thought I would use, but never ever in a day of light ever used it, you can delete it.
Then you can delete it. Yes, as
Yes,
long as there's no activity at all.
exactly. Now, the
That's
rule
what
of
I need.
thumb here is you usually don't delete anything in your book. So this is more geared towards like if you did create an account that you possibly did do a transaction with, but it never went through, then the rule is you should never delete it. So this is also true for accounting. If you have, for example, a journal entry, you entered it in, you can't delete it. You should always try to reprimand it or reverse it or try to edit it in some kind of way. But the rule is you shouldn't delete it because that is what red flag for fraud. Okay, so that's why it's the rule to never delete anything. So that's why we don't delete checks if they've been written out. We void them. Because if you delete them, then your system's gonna record there's a hole in your system, and that the first thing you're gonna think about is someone wrote that check out, took that money out for fraudulent reasons. Okay, so that's exactly rule of thumb is you should never delete any of your transactions. Okay, so yes, okay, never delete anything. But yes, for if you are setting up and you just don't ever use that account, then that's okay. As long as there's no transaction involved in it at all. In the 10 years you've ever used it, it's safe to delete it. Okay? Now, with that being said, if you end up making an error, you can edit the entries at any given time. There's no real rule against that either as well. Okay, so that one is pretty straightforward. However, what if you have too many accounts that are similar and you want to combine them? What's the rule on this one? How do you actually merge items together?
There is like if you have two customers, same customer, just somebody spelled it wrong. I think there is a button that you can merge. But where is it?
Okay,
So
so
on page 360 and 362, it talks about, um, so it says it brings up a window that you if you want to merge it.
Correct. Now, what
Now that the
what
account
step
has
do you have to
to the
take
other
in order? Mm-hmm.
What?
So it says on here for step 5, now that the account has the same name as the other account, QuickBooks asks you if you want to merge the two accounts.
Okay.
Right.
Now, what's the first thing that has to happen in order for you to edit that account?
Select the account name.
Which one?
Oh, go to your chart of account.
Okay. This is okay. Okay. Back up. So you're gonna select an account, right? So this is just the example that I showed you in class. You're gonna select the account. Now, which account are you gonna select? Are you gonna select the one that you want to keep, or are you gonna select the one that you don't want to keep?
The one you
The
want to
one you
keep.
can, you want to keep.
No.
No, you're merging because you're merging them.
Merge
So
it.
you want the one that you don't want to keep.
Correct. Okay, so we
Okay.
select the one, the item we no long we don't need we don't want. Okay, and what do you have to do to that account when you select the one that you don't want?
That's when you merge it. You put it
How do you merge it?
you will put
That's what I mean. I have to actually be in it to see if there's
I
some,
know.
because there is that box that comes up and asks you, and you select
Correct.
merge,
Right,
and then
but there has to be you have to be inputting something.
underneath the main
No.
no. I know. No, I'm thinking already it's a sub account.
Yes. So here you go. So I'll go ahead and let it go for you so you guys, so we can get through this a little quicker. So what you're going to do is you're going to actually select the account or the item that you don't want. Okay. You're going to edit the account and you're going to enter in all the details that's exactly identical to the one that you want to keep.
oh, okay, that's okay.
And then once you do that, then QuickBooks is going to notify you saying,
Save it.
"Hey, this account or this item already exists. Do you want to merge it?" So that's the most important thing, is that you're going to edit the account, or actually I'm going to write edit item. Uh, excuse me, with details that is identical. It has to be identical, cannot be similar
Right.
to
Address,
the
way to spell everything has to be the same.
correct.
Like save, right? It'll say, sorry, this is already, do you want
Correct. Correct.
Okay.
Correct. To item you do want, and then message will pop up. This item exists. Would you like to merge? So rule is you're going to select the one that you absolutely don't want anymore. You're going to edit the information to look identical to the one that you are trying to merge it with. And then it's going to give you an error message saying, "Hey, this account exists already. Would you like to merge it?" And that's where you actually merge it. Now, another, I guess, a little tangent here is that if you do merge accounts, that means anything that has within those two accounts that you have used before, let's say you have transactions in both accounts or both items, you wouldn't be able to differentiate once you've done the merge, and you cannot undo a merge.
Right.
Okay, so once it's done, it's done. All
So
right.
that's different when you're putting a sub account underneath.
Correct. Sub accounts is so again we talked about a main account. You can break down your inventory into the exact items that you sell.
That's where
Because
what
if I
I had in
correct
mind
it,
when you said merge, and then what came to my mind is, oh, that needs to be under a sub account instead. No, okay, okay.
yeah.
Okay.
And if I remember correctly, that's one of the times you have to be under single user mode.
Yes.
If you want
Yes.
to merge an account.
Correct, because it has to be applied throughout every single one. Yeah.
Yeah.
Okay. All right, so now that section is done, next section here is going to be items. So 5% of the exam is going to be, so approximately 4 questions. So roughly 4 questions about items. So a student should know, number one, how QuickBooks uses items to perform the necessary accounting behind the scenes. So we talked about what items are. What are items?
That is, those are our things we sell or
Mm-hmm.
services, right?
Mm-hmm.
I'm thinking of the part of
Anything that
account.
has the bad debt,
So I'll summarize it for you. It's to break down the sales. Okay. To break down
to what?
sales.
Sales. Oh,
Mm-hmm.
breakdown of sales.
Um to break down, okay, I'm gonna change that. To break down and categorize the sales. Okay, so looking at items that you sell, right? Looking at the sales tax item, looking at bundling, making group items and bundles, right? Making discount items, so then it discounts the items that you're selling. To making a purchase returns and allowances, right? We talked about, or not, sorry, sales returns and allowances, right? To write off a bad debt. So anything, it basically breaks down and it breaks it down and categorizes it in further detail when it comes to anything that has to do with sales. You can't use an item to do payroll because we have payroll items. You can't use items to actually break down other account items, right? We have sub accounts for that. So this one's actually only geared towards directly for sales. So you can have sales of service, right? Okay. So that is that part right there. So again, in chapter 7, there's a list of all the different types of items. I want you to, for this particular question, make sure that you understand the total 10 items. So
Okay.
yeah, the total list of 10 items, what items are available, okay, and what you'll use each item for in particular. So understanding, if you're selling a service, you have a service item. If you're selling a product, you have an inventory part. If you have, if you're planning to sell sales tax, right, charge sales tax, you have a sales tax item, et cetera, et cetera, et cetera. So make sure that you understand the difference between the 10 items that you have available and what each item does in particular for the sales
What was
process.
that again? I'm sorry.
Chapter 7.
Okay.
Chapter 7, I don't know what page, but it is that list right under the
Yes, I
items
there's that list.
list.
Yeah.
Mm-hmm. Okay. All right. So then, so that's where this right here, the different types of items and what they're used for each type. So that's, I should put that information right down there. So that page of the 10 items that are listed there, make sure you understand and know what each item is used for. All right, and we also took a example of looking in how to set up each item. Well, not each one, but we got to take a look at a few items that exist. Okay, how to use, and then we'll talk about this again when we actually go into inventory, because chapter 8 is actually talks a little more in depth about the setting up the actual item part itself. Okay. So how to use items for different types of scenarios. So again, products for a specific price. Okay, how do you use items for products for a specific price?
I don't know what you mean. Can you,
Products for a specific price, meaning, so when every time we create an item, right, we have the choice to set a selling price to them, right?
right?
And then each item, right, can have whether it's a taxable item or a non-taxable item or it's a service item, et cetera, et cetera. So that's for a specific price, and to set the specific price, but also set whether it's taxable or not. So products for a specified price. And then you could also do discounts for that. So a discount item could be a product for a specified price, right? If you have a sale item, it'd be based off of that specified price. So how do you use the item for different types of scenarios? So in this one, it says when you set the price point for items. So again, we talked about service items, right? Service are going to be a set price, a specified price. If you're selling a specific item, such as coffee mugs, it's going to be, you're going to use the inventory part or service item, okay, to sell an item for at a specific price. Okay. Other things too is deleting entries. How would you use items for different types of scenarios, such as deleting entries? Do you remember this one? How did we use the bad debt item? I mean, I just answered the question. So this one, okay, to delete an entry, right? How did we remove?
Contra account.
Yes. How did we remove it? We created a bad debt item, which is an other charge item. Right? That's how we deleted an entry, right? Or in this case, voided the entry, is we used an other charge item to create a bad debt item. Okay?
But isn't it, we were just talking a while ago, this never delete?
Yes, but that's why the question is, how do you use an item in order to delete an entry?
Oh, okay.
Okay, so in this case, we're not really deleting the entry. What we're doing is we took that bad debt item and basically reversed the entry as if it never happened.
Right.
Okay.
So okay, maybe I'll change that word
It's
next
still
time.
there on the books.
Yes.
You can write it off as bad debt instead of
Right off,
letting it
yeah,
sit in your
yeah.
aging.
So again, service for a specified price, pretty straightforward. You would use a service item for that. Okay. And then let's see here. Unique products or services that have different prices for each sale. I'm not quite sure. Sorry. Unique products. Okay. So this is applied for inventory assembly. Yes, right? Because you're creating a unique item or service, right? Inventory assembly. Okay, and you're creating that item in order to create a unique product to sell. All right, so again, this is going to be something that you may want to look over because it is an important chapter. I mean, not an important chapter, but it is a small section as part of what you normally could do for a business. You can create items and sell those products. Okay, one service or product, pretty straightforward, right? You have inventory part. You have non-inventory part, which we'll talk about when we come back from the exam on Monday. Okay. And then of course service. Okay. So all those items you can use. All right. Next section here is actually going to be looking at the sales process. So again, that's 10% of the exam. It was also split into 2 different chapters. So you guys can assume that this is going to be a major chunk in the major chunk of QuickBooks, just because it is a major transaction that you commonly use QuickBooks for. All right. A student should know, okay, who should be listed in the customer center? Straightforward.
People you sell to.
Exactly. Exactly. That one's straightforward.
Customer.
Yes. Anybody that's a salesperson. And you can sell to your vendors as well. Okay. How to navigate and use this customer center. We talked about this. Well, first off, what are the 3 ways you can get into the customer center?
Okay, there is on the home page, there is the tab
three,
at the
the
top,
three, the
customers.
three major homepage icon and menu bar.
Yes, menu bar under customers. So customers. Yes, you can access the customer center that way. Now the question is, how do you navigate the customer center? Pretty straightforward, right? When you get to the customer center, your information is all here. Every single transaction you can do for a customer is either up here, or you can right click it, which gives you more expansive, right? To navigate it is pretty straightforward, right? If you have a transaction for a particular customer that's dealing with sales, because sales are strictly customers, you could go to manage transaction at the bottom. You can go to new transactions at the top. You can right click them and look at all the list of transactions. So navigating the customer center is pretty straightforward. Okay. So so how do you do so where am I? I think I skipped too far down. Okay, so I answered the navigating the the customer center. Okay. Now the next question says how to complete the workflow from the home page. Okay, in the sales on the sales section, right? We talked about how invoicing, or well, it starts with estimates first, then invoicing, then it flows to receiving payments, and then it flows to your deposits. So again, what this question is referring to is understanding how this line works right here. Okay, and also how the sales receipt actually just goes straight here. Okay, so that's what this question asking is, how to create an accounts receivable. So pretty much sales process here is understanding the flow. So first comes first is you create the invoice. Okay, and we'll also review the 7 ways to get to an invoice. 6 ways to get to an invoice. Then next is to receive payments. Right? And then after that is to record the deposits. Okay? So again, invoices. What are the 6 ways you can create an invoice?
Home page.
Home page. You got the create invoice right there.
The little create there.
Mm-hmm.
You can do it up on the menu bar.
Where on the menu bar?
Under, let's see here, customers.
Customers.
Invoice.
Create invoice. Mm-hmm.
Okay, and then you can do it in the, what do you call that other one? The icon one too?
The icon it only takes you to the customer center.
Oh, okay, so then you're in the same place, so,
Mm-hmm.
and then the,
When you select the list of customers there, right click.
yeah,
You can right click on somebody and create an invoice. Yes, you can. Okay.
and go to the manage transactions below and select it there.
Mm-hmm. Mm-hmm.
And the customer itself. Click on the customer itself.
Click on the customer itself
Yeah.
and do what?
Wait. I think that's where you do the right click.
Yeah, yeah, you already did the right click. Where's what's at the top of the what is the top of the customer center?
Oh, that's the, yeah, that,
Yeah, new transactions, invoices, and then the last one, it's new to 2018, QuickBooks. But if you prefer to use it that way, you also have the income tracker. The income tracker, you can create invoices this way too. Yes, you can.
But on the icon, there's also the income tracker there.
Yeah.
So we can use that.
Yes, you
could've
can.
went over there too, but yeah, I get you. Either
Yeah,
way.
yeah. Either way, as long as you get to the income tracker, that's the way I'm trying to tell you is, as long as you can get to the income tracker, whether it's through the customer center or the icon bar, the next step after that is you gotta go into manage transaction and click on invoices. Okay. So that was 6 ways you can enter in an invoice. Okay. So again, remember, I'm not going to go through every single one, but if you can, if that's one way to get into an invoice, you can expect the rest of the scenarios to be the same for anything that has to do with sales process. So if I have to record a sales receipt, you can imagine all those ways that we just looked at is going to be the same. The only difference is that when we look at receiving payments, oops, sorry about that. When we actually receive payments, right? You can do all of those exact ways to receive a payment. However, there is that one extra one that you can also receive a payment as well too, is that if you are currently in an invoice, right? So it's all 6 ways, but the last one for for receiving payments is actually going to be on the invoice form itself, right here at the top, receive payments. Okay, so for receive payments, you could do every single way. This is the last one on this one. Okay, so yeah, that's how you receive payments, and then understand and record deposits, which we took a look at. You need to record cash and check separately, and then you have to record your credit cards with different percent charges. Okay. All right. So there you go. All right, and then sales receipt, as we saw before. What's the difference between an invoice and a sales receipt?
Sales receipt, they're paying now.
Yes, good. All right. Now next, here is how QuickBooks uses the undeposited funds or accounts receivable and checking accounts in invoicing cycle. So pretty straightforward. This one is, how does it use those accounts? Where does the undeposited funds, where is that located? Say that again, Lynette. What did you say?
I don't have my screen, so that's the reason I cannot. So
Okay, so okay, in relations, what can be associated with an undeposited funds account when you're dealing with a sales process? Say that again, Robin.
I was just gonna say the money that you receive from the invoices, which is the sale, okay.
Correct. It's going to be located right here. It's the money that you receive from the sales. Yes. So in our retrospect, okay, so this is more of accounting behind the scenes, is if you got money and it's all in the record deposit section, right now all that money is going to be in the account called undeposited funds account. You have to you have in QuickBooks, you have to record the deposit, which allows you to transfer the undeposited funds account, and it transfers it into your checking account.
Oh,
Okay, so that's something that you had to read in the in chapter, whatchamacallit, in chapter 2, when we did our first transaction, our first sales receipt. Right after it tells you about the undeposited funds account. Okay, so make sure you go ahead and read up upon that. And so this is basically asking, how does QuickBooks utilize that? Well, when you receive money, right, you're holding on to it, but what are you going to do with it? You're going to deposit it. You have to go to the bank physically and deposit it. And in order for QuickBooks to know you made the deposit, you have to go in, make that deposit slip in QuickBooks for it to actually do the debits and credits behind the scene to transfer from the undeposited funds account into your checking account. Same thing with accounts receivable. Yes, thank you. Page 43.
Yes.
Okay? So same thing with accounts receivable. Every time we create an invoice, it's going to increase your accounts receivable, right? Every time we do a sales receipt, we're increasing our checking account. Well, actually, no. Checking account, not for that one. You have to do the undeposited funds before you can go straight to checking. Okay? But yes, so that's how QuickBooks uses those accounts for the invoicing cycle process. Okay, so in this case, if you're strictly only looking at invoicing, it's going to be accounts receivable first, aka your invoice. Then when you receive your deposit, when you receive your money, it goes straight to the undeposited funds, and then when you record your deposit, it's going to go straight into your checking. So understand that flow of direction if it's strictly asking for the invoice cycle. Okay. How and why to record a customer credit. Okay. We talked about this. This is on in chapter 3, the very first page of chapter 3. Gives you
Is it under, I see refunds and credits under customer?
correct. It says how and why do we record a customer credit? Yes, it's those it's those
Exchanges, discounts.
correct. It's for when a customer returns merchandise. What else can we also use the credit for?
Sales discount.
Merchandise. Yes, you could do for discounts. Yes.
Cancel.
Cancellations. What else? There's two more
bad
things that you
debt.
can use too. Bad debt. Good. Bad debt. Yes, you can.
Ooh, that was a good one.
Mm-hmm. And what's the last thing too? If a customer overpays the account,
Oh,
you need to send them a credit. Yeah.
send them the credit. They either want to check or keep it for a future purchase.
Correct. So when a customer overpays. So these are the general rules of thumb. If they for surely we commonly use the credits primarily for when returns of merchandise is available. But also to for second other ones would be the most common one would be for bad debt when your customers just don't pay. Okay. All right. I think this is the last question. Oh no, two more questions. How and why to create statements? What's the purpose of creating a statement?
So the customer knows what they have outstanding.
Good.
To, a summary of the activities.
Correct. So for customers to know how much they owe, but it also gives you details.
Details of activities.
In account activity. Correct. Like what did they buy? Okay. Good. All right, last but not least, how to handle bounce checks, NSF checks.
notify the customer?
Why would you modify the customer?
Notify.
Notify.
Notify. Oh, okay. Notify. Yes, you can, but okay, notify the customer.
Notify the customer.
But in QuickBooks,
Yeah, but in
Oh, but
QuickBooks, yes.
To input charges that the vendor encountered.
Okay, so not the vendor. Who's going to be
No,
charging
the
you?
seller,
so
the
do you
bank,
call the
the
bank
bank.
and to void or stop payment on the check?
Okay, that's if we write the NSF check. So yes, if it's okay, let me go ahead and write that in there. So we have customers who write bounce checks, and then we have us if we wrote the bad check. So I'm gonna write what are we, company? Company.
yeah.
If we write the bad checks, then yes, we gotta call the bank. We gotta tell them to void the check, or we gotta notify the bank. Or well, actually, the bank's gonna notify you,
Isn't it
not the
right?
other way
Most of
around.
the time, I'm sorry, isn't it most of the time banks, um, they redeposit it without your knowledge? I think that's what most of the banks does now.
It depends on what the situation is. Is it when you say redeposit, as in the customer, like the customer's check is being redeposited, or is it the company's check is being redeposited?
Company, I thought banks, and granted that the first deposit that you have made was, what you call this now? Was
So when you
NSF,
say
it
the
bounced, but then they just automatically redeposit again without you notifying it. I think that's what, it's been a while.
It depends on what it is. So oftentimes, they will attempt it multiple times just to make sure it's not a fault on their end. And then once they've confirmed that the customer that you're making the deposit for, right? If the customer for surely, because the banks, they can look into their account and for surely know that they don't have any money in there, then they notify you. Well, yeah, they notify you as the company saying, "Hey, you have someone with a bounce check." You either notify the customer and let them know, but I'm going to charge you the bank fee because you deposited a faulty check. Right? Now, if you write the check out, you got to notify the bank. And you know what I'm saying? Because it's in a sense that where you're going to get notified from the bank because you wrote the bad check. You're going to get fined for that, and you're also going, there's a lot more details when it comes to when you write the
That's
thing.
included. It's based on the deposit that I was referring to.
So the customer, yes, they're going to notify you, and that's what I'm saying. Some cases they will try again to redeposit it in case, because again, they want to make sure that is it their fault that they tried to like, did they make an error trying to deposit the money in? They also check into the customer's account. But if they verify it that this person hasn't wrote that check in, then it's their duty to call their bank to say cancel that check, void it, because I'm going to send a new one. Or if they want to on their end, they can deposit money. So then when they tell us, the vendor or the company, to redeposit the check, then yes, that's the case, because usually this kind of thing happens in a matter of 2 seconds. Okay, they just run the check and said, sorry, this person's bank account doesn't have enough money. Okay, and yeah, you get notified and someone else gets notified. So at the end of the day, people know. So for example, if a company let's say for paychecks, for example, right? If a company gave me a paycheck, I deposited in, and it doesn't clear the next day because I get a big fact notification saying, hey, you deposited a check that can't clear because the other person doesn't have enough money in their bank. Yes, it usually is a 24-hour transaction, but usually it should be instant. Okay. Any questions in regards to this particular part? So this question is, how do you handle it? So this is where I was talking about, yes, how do you handle it in QuickBooks?
Right. So once you get notification, you would go in, obviously, this is what I do. So you may have different ways, but I would go into the customer itself,
Mm-hmm.
locate that check.
Okay.
Okay. So I'm just trying to find somebody who's paid with a check here. Well, in the meantime, I'm gonna say
Bob
I-
Mason.
you're in, right, and so you're in the receive payment area,
Mm-hmm.
and you're looking at that check, and then there's the icon up there that's record bounced check,
Good.
and then from there it gives you the options of your charges. What are you adding?
Yeah.
Yes, and that's where you can enter in um, bank charges and apply additional charge to the customer. Okay. All right, good. Okay, so let me see if we're good on time. So it's all good. We're at 3:45. Let me go ahead and just scroll to see how much more we have left. Okay, so we have quite a few left. So let's try to just go ahead and go through one now that we finished section this section here. So if you want to know for company reasons to what happens when you handle a bounce check on our side, there is a page in the chapter. We just learned this one in
Page
chapter.
152.
Okay, bank. Yes, pay it. So it's chapter 5.
152, and then, if your check bounces, so that's a customer's 152,
Mm-hmm.
and then 155 is if the company bounces the check.
Okay, so 155 for us, and then for customers it is page 152. Good, thank you.
You're welcome.
All right. So now that we have that section done, next section is purchases. So this whole section is chapter 8. So I'm going to go over this the second time we do our test prep because this is all chapter 8 stuff. It is going to be a little review of chapter 7 because setting up items, obviously, and also vendors itself, chapter 4. But I want to save this whole section for chapter 8. Okay, so for next week. Payroll. Payroll is also something we're going to talk about in chapter 10 and 11. So we can skip this whole section too. So I'm going to go ahead and put a notification right here. So purchases is technically, I'm going to write here chapter. It's kind of 4 because you're dealing with your vendors, but it's also chapter 8 for purchases of inventory. So purchase 4 and 8. And then let me see. Payroll is going to be chapter 10 and 11. Okay. So let's see what's next. Okay, reports. We just talked about reports. Okay, so chapter 6. A student should know why and how to use the report center. Pretty straightforward. I went over that yesterday. So there's ways that you can use the report center, right? You can view them in 3 different ways. But why do you even use the report center in the first place?
See the history of a particular customer, the summary of overall
Profit and loss, all that stuff.
loss.
Yes.
Everything business.
Sales.
Mm-hmm. So basic question that you can, or basic answer you can do this is to create reports, right? To just create reports and projections. Actually, you can't make a projection here, but you just create reports to help the business and or to understand the accounts. Okay. Okay, so, I'm actually good. So what are the two types of, what are the two types of reports that exist in the report center? Or the reports in general? What are the two different types of reports?
Management, accounting and
Accounting
management.
and management, business management.
Business management. Okay, make sure you know the difference between them because that's going to ultimately determine how and which reports you're going to be utilizing. So again, the accounting one is primarily anything that's using the account per se. So your profit and loss, your trial balance, your general ledger, right? Where everything that's a business management is going to be dealing with your people, your customers, your vendors, your employees, at your sales process itself. Okay. All right. Then now it says, how do you customize reports? So remember, we just went over this. We're under customizing the reports. What can you do?
You can pick if it's gonna be cash or accrual.
Yes, you could determine cash/accrual. What else can you do?
What about the view?
What kind of view?
There's the carousel view.
Oh, okay. No, that's going to be in the report center.
Oh, sorry.
Customize the how you want it, the color, something like that.
Yes, you can change the color, the font.
The font, yeah, yeah.
What else can you change in there? What's most important that you can change in there?
Mm, I was thinking similar to a letterhead, something like that, but that's different.
Mm-mm, mm-mm.
Oh, how to customize it. Oh, says you can build custom reports.
Okay, that section I'm gonna leave it for professional people who are very good at QuickBooks.
Yeah, no, I've never been good at building reports.
Okay, it's the very, very first section I showed you guys.
Headers, footers, fonts, or columns.
Columns, yes, you can change the information you can change the details that appears
So
on.
like the class, the job,
Exactly. You can say, well, if I'm looking at my customer list, right? We remember when we build our marketing list, right? I got my list of customers, but do I need to have their billing information on there, such as besides their address? Do I need to have their account balances on there? No. I do need to address them. So I have my Mr. and Mrs. I have their first name and last name. I have their billing address. Sometimes you can have their phone number if you want to call them. You don't need their email address, etc. Right? You can determine what details appears on the reports. Okay, that's the most important one when it comes to customizing. Okay, is that you can add information or delete information that you want to appear on the report. Okay, and you can obviously change the colors and fonts. You can change headers and footers. You can change the company name to your name, right? You can also, another one is, I do think that cash and accrual basis is very important, especially when you're doing the more accounting section of the reports. All right, good. Okay, so the basic question that each report answers. So pretty much, again, every report is going to answer a question that you have. Understanding what question it is, well, you got to first come up with the question, right? And then that's how you determine which report you're going to create. So that one's pretty straightforward, right? Profit and loss measures profitability, right? Balance sheet measures the accounting equation. Does your assets equal your liabilities and equity? Statement of cash flows. How much cash is actually really flowing into your company, right? So every report that you have is is pretty much going to answer a question that you want to have answered. Okay, so that's a pretty straightforward and question there. All right, and how and why to send reports to either Excel or how to update, refresh, etc., etc. So I did show you this as well. Main real purpose to send reports is, again, if you're in a company, maybe you want to send it to your profit manager, right? You export it to Excel for reasons being maybe you want to make it more prettier, or you want to make the columns look a little nicer, or you want to build a table in there. So that's pretty much what that question pretty much asks, okay? And how and why to process multiple reports. Now again, to how to process multiple reports. This is in your book. So the purpose of having multiple reports is, in fact, is so then you can, you know, pretty much same thing as like, what do you call it? Answer multiple questions at once. So to process multiple reports, yes, you can have as many reports as you can. Again, if you have the multiple windows open, you can have them all open at once. So this answer is going to come straight from your book. Just making sure we're good on time. So this one's going to be,
So processing multiple reports is on page 193.
thank you, 193. Good. All right, and then let's see how and why to memorize reports. What's the purpose of memorizing reports?
So you can look at them or run them every month or every quarter or
Good. Good. It's also to, if you've customized it, right? If you customized it in a certain way, you can run slash create a new report using customized settings, right? That's the purpose of having a memorized report, is to save your changes, let's say again, so you can produce another report without having to edit all the information again. Okay, so basically saving a template, if you want to think of it that way.
And that's page 190.
Okay, perfect. Thank you.
Oh, thank you for sharing that.
Yeah, that's very useful. Page 190.
Yep.
Okay. Don't worry. All this, I'm actually gonna save this and post it onto your Google Classroom. So just know that this is going to be there as well. All right. So file. I'm gonna try to. Okay. So basic accounting. All right. So this is gonna be 10% of your exam. So basically 5 questions. All right, so pretty straightforward. These are things that we learned in chapter 1, okay? And yeah, chapter 1. All right, so what are the basic financial statements? In QuickBooks, we only learned 3. What are the 3? Because it was QuickBooks.
Profit and loss,
Yes.
uh, statement of cash flow, and the balance sheet.
Good. The balance sheet. Good. All right. In accounting, we learned that there's 4, but remember we talked about the statement of equity is actually going to be combined with your balance sheet because equity is part of the accounting equation. All right. So here you go. What's the difference between cash and accrual reports?
accrual. Now I'm gonna get this wording wrong,
Good.
but accrual is you made the sale and you haven't received
You
any
haven't received.
payment, so it's like something that's invoiced, but it's sold, and cash is obviously when you have received cash now
Mm-hmm.
to do the sale or the transaction or the job or whatever. You
Mm-hmm.
receive cash immediately.
Good. So accrual. So in other words, I'm going to say when when you're recording transactions such as income or expenses, you okay, you record at time of
Service,
sale,
not time.
at term of sale or completed service. Okay, regardless of receiving payments. That's pretty much it. Okay? Where cash is recording transaction when payment is received. Okay. In this one, and it can, yeah, at time of sale or completed service. Okay, good. Yep, good. All right. Next question is how and why to set a closing date. This is actually a chapter 13 question. So I'm going to go and highlight that and I'm going to save this for chapter 13, which we haven't talked about because we talked briefly about it in chapter 12, but there's actually more in depth for reasons why we actually have to choose a closing date. Okay. Oh, whoa, hold on. Okay. So chapter 12 briefly talks about setting a closing date, right? Chapter 12 says the very last step to completing your company file is to set a closing date. But chapter 13 is going to go more elaborate why you need to choose a setting date. Okay. All right, let's see. Okay, so how to enter a journal entry as okay, so this one is also chapter 13. Okay. And we'll talk about why because primarily we use the general journal for a reason. We use it to primarily do it for adjustments, okay? We don't use it on the daily for reason beings because we have the transaction we have the transactions that pretty much do the accounting for us. They do the debits and credits for us. So the only purpose that we use a general journal is for doing adjustments, which is in chapter 13. Okay. So last section, yes. Okay, so now we're going to talk about customization / saving time and shortcuts. Okay, so a student should know, okay, how and why to memorize transactions. Again, this is a chapter 13. All right, we'll talk about that more in depth on why it is necessary to memorize a transaction. Okay. Second one here is how to set up multiple users and what levels of account of access they have in QuickBooks. So again, oh, and actually not again. In this one, I actually showed you how to do it in chapter 12. Yes, we did. We did do this in chapter 12. Okay, so how do you set a new user?
So go to the company.
Company.
Create something like that. Create a new user, something like that, and then
Okay, so company, what are we doing? Where is this company from?
Is it where it's set up the user and the password?
Correct. If you go to
Same
company,
thing as before, okay.
but this question's different. This is one of them is to set the actual password for the file. This one is actually setting up the user so then they can have access to QuickBooks, but you can limit what they can do. So like as I said here before, so you can set up users. That's how to do it. And remember what I told you. You can have multiple positions in a company, right? You can have one that's strictly for payroll, right? HR. You can have one that's just specifically for accounts receivable, so it's dealing with the invoices. And then you have a position where that's strictly just accounts payable. So that is it's to set the password for the overall to lock up your QuickBooks file is going to be a separate task than setting up a user. Okay. So again, it is company on the menu bar. And it is going to be set users and passwords. And it's going to be setup user. Okay, so I gotta change that because I spelled passwords wrong. Passwords. Okay, so last two questions. Okay, how and why to create custom fields. So we talked about this in chapter 7. Yes, we did. This is a chapter 7 thing.
How and why? Is it for jobs, classes?
No, those ones are set custom fields. Okay, so let me go ahead and do the how, and then why will be next. Okay, so first off, how? How do you create those custom fields?
Oops, I'm looking. User preferences.
Let me go ahead and put a, actually, no. How is fine.
So I guess you do it through preferences, right?
No, it's not under preferences. Okay, let me go ahead and do a what, so then that can help you a little more better. Okay, first off, what are custom fields? What's the purpose of having a custom field? Why do we create custom fields? Or in this instance, what is a custom field?
It's something we're adding that's maybe not for everyone.
Okay, good. So this is additional information. Okay, you create custom fields for additional information. Okay, that you get to personalize. Okay, and like you said earlier, yes, it doesn't really apply to everybody. Now, when you said everybody, what are you actually using these custom fields for?
To help with your reporting.
Okay, no. If this is additional information, right, it doesn't have to be revolving a transaction per se.
Their spouse, their hobby,
Correct.
that kind of stuff. It's like I
Yes.
can see it in my head, but I can't tell you how we got there. I can't remember.
this is a chapter 7 thing.
Selecting those things,
Okay.
their spouse and things like that.
Okay. So, we do use it for additional information for our people, right? Our people could be
Your employees,
yes, for people could be your customers,
vendors, and employees.
vendors, and employees. Okay. Now, we can also create custom fields for our items as well. Actually, for items such as your account, right? Remember when we talked about how each account type has a subtype? Those are customizable, as in you don't have to have a banking per se. It could be something else. If you don't use accounts receivable, you don't have to use accounts receivable. It's just how they formatted it. Okay. So as long as you have the amounts. Now that we have this established, what is the rule? How many custom fields can you have in total for those people?
Okay.
10?
There should be
Not 10.
5, 7.
Okay, I heard 5, I heard 7, I heard 10.
5.
12.
But-
Both 12.
It's, you can have so many of them, but you can only have a percentage of them turned on.
Correct. Now, what is that? What are those exact numbers? So Michelle is on the right track, but what are those exact numbers? Yes, you can have a total of 15 custom fields. Now, how much can each person have?
There you go. That's a 7.
7. Yes. 7 per person.
12, 7, 12.
Yes.
Right?
Now,
Oh my God.
we good, but no, Robin, you hit a good part here too, because for items such as when we talked about my sub items, you can only have a maximum of 5 custom fields there. Yes. Okay. So you can only have 5, maximum 5 subtypes. Okay. Sub accounts for each account. I believe I think you can have as many sub accounts as you'd like. It doesn't have to be specified, because if not, you could just create more accounts under it. But 5 for sure for creating items. Okay. For subtypes.
Question on that. When you say total of 15 customer,
Oh, did I say customers? Oh, custom fields. My bad. Thank you.
custom field. I thought customer because I said, what if I have more than 15 customers?
No, no, it's okay. Sorry, that was my bad. Thank you. Okay. All right, we're good on time right now. So last but not least, actually, first off, how do we create those custom fields? And the what kind of define the why? Okay. How do we create these custom fields?
Let's see. Let's see.
Okay.
Custom fields. Is it edit customer?
Yes, good, good. That's one way to get there.
So customer and then, so that's one way.
Okay, well, when you get to the edit customer window, where else do you need to go? Additional info, and then you have define fields right here. So once you get to this window, that's where you can add as many that you need. Well, only 15, sorry, not as many. 15, and you can only select up to 7 per person.
I'm sorry, can you do that one more time for me? I didn't see what you did. I was looking and.
No, it's okay.
I know.
So it depends on whose profile we're on. So if I'm on my customer, okay, which I am, I go to additional info, and then I have this section right here where it says custom fields. Right below it, you have defined fields. So when you click that, you get this window where you can define your fields. You can add as many fields as you need. Well, I mean 15. I keep saying that. You can add your 15 custom fields, and here is where your check mark for each column. For customers, your vendors, and your employees. You can only select 7 out of the 15. Okay.
Why does mine look so different? What did I click on? Huh.
Yours looks different?
Well, yeah, I don't have, like, so I clicked on customer over on the side, on the icon, right?
Oh, okay.
Is that, but I did it across the top too, and I'm not seeing, maybe it's customer center I need to go to?
Yes, you need to go to the customer center.
Ah,
And then you need to go to edit the customer.
and then
Additional.
edit the customer. I see that mine doesn't look like that.
There's two, I was gonna say, you can right click and edit, or there's over the customer information, there's the paperclip, and then there's the edit button.
The little pencil.
You can hit it there too, yeah, the little pencil looking thing.
So
Oh, there we
yeah.
go. Okay, I didn't
Yeah,
know
so
that.
you have to edit the person's information in order to access that part. And that part's located under additional information.
Okay, got it.
Okay, good. So I'm going to go ahead and put how. So you have to go on a profile. Okay, so whether it's a customer, so the example, so I'm going to write example. You go to customer, customers center. Okay, edit a customer info. Okay. You're going to go to additional info. And then you're going to select define fields. No, it's okay. I know it's define fields. Okay.
I didn't turn a light on them in the dark. It's not helping anything.
We're almost done, Michelle. Almost done. We got one more question left.
I'm fine.
Almost done. All right. How to customize an invoice. We talked about this. How do you customize an invoice?
Let's see. I'm gonna go vendors.
No, you don't need to go to vendors.
No.
Okay, this is also chapter 12. Actually, no, chapter 7. Customizing QuickBooks.
On the list.
You go to list.
What was the question again?
How do you customize an invoice? Templates, good. Okay. And then you can select your invoice there. Okay, so you can either create one from scratch, which I don't recommend because you could actually miss a lot of columns. So just take a pre-existing template that's already existing and make a copy of it. Or if you want to just edit one of these templates, you can do it as well. And it shows you a little preview of every edit that you're making for the invoice.
Right. Duplicate and then invoice, and then you name it whatever you want it to be. Okay.
Correct. Yeah. You can name it, edit whatever columns that you need, change the color, formatting, make it customizable to yourself. You can add your company logo on there. Pretty much you could do a lot of stuff on here. But again, as recommendation, don't ever do it from scratch. Okay, that's the reason why they have templates in the first place. They have Intuit templates already for you. So then you can, if you're, if you are not as creative, or if you are kind of, in other sense, don't want to create one from scratch, you can just use one of theirs. Okay.
What if you want any of theirs?
Well, I mean, they preset it for you, so it's just there for you. So it's mere for convenience.
Okay.
Okay, so how to customize it is going to the list menu bar. Okay, then you're gonna go to templates. Then you're gonna go to select any form slash invoice slash receipt, whatever it is, and you edit that template. Okay. All right. Edit template or make a copy and template in. Okay, there you go. There you go. All right, good. So any questions in regards to this whole entire thing? So again, anything that's yellow or that's highlighted are going to be left for the next section of this. So actually, so I'm going to also make a couple announcements as well while we're at it. Since we're here, this will be posted